The US dollar just had its worst start to a year since 1973. And that's not fear-mongering, that's a fact. But this isn't just a blip, and it's not the full story, because there's one chart, one shift in global reserves that proves this isn't just a dip in value. It's the beginning of the end of dollar dominance. And almost nobody's talking about it. You know, back in 1973, the dollar collapsed.
The US dollar index has slumped 10.8% in the first 6 months of 2025, and that's the biggest first half fall since 1973.
Gold was unpegged, inflation exploded, and trust in the dollar nearly vanished. Fast forward to 2025, and we're watching the exact same foundation crack again. But this time, it's not loud. It's quiet, it's strategic, and it's global. This isn't a dramatic event, it's a slow motion collapse, and it's already started. In the first half of 2025, the US dollar dropped over 10%, its worst 6-month start in more than 50 years. The last time we saw a fall this sharp, Nixon had just pulled the US off the gold standard.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
But what's happening now is even more alarming, because it's not just market volatility or political headlines. It's the world quietly walking away from the dollar. Central banks are unloading US treasuries and loading up on gold. Over 1,000 tons per year for the last 3 years. And here's the chart that should stop you in your tracks. Gold now makes up 20% of central bank reserves by value, surpassing even the euro. And let me say that again. Central banks now hold more of their reserves in gold than in euros, because they're hedging against fiat currencies, political instability, and the risk of US sanctions. Gold doesn't default. It doesn't print. It doesn't require trust from any one government. And right now, trust is wearing thin. And those same central banks, especially in Asia, the Middle East, and parts of Europe, are reducing their exposure to the dollar in the process. According to IMF data, central banks plan to continue increasing their gold holdings while reducing their dollar exposure over the next year. That shift isn't speculative, it's strategic. Meanwhile, US debt levels have skyrocketed, the Fed's credibility has cracked, and foreign governments are asking one quiet but dangerous question. What happens if we stop trusting the dollar? Let's talk about BRICS. Brazil, Russia, India, China, and South Africa. They've added new members, formed their own financial institutions, and most importantly, they've started settling major trade deals like oil and gas outside of the dollar. Russia is taking rubles, China's demanding yuan, India's paying in rupees, and even non-BRICS countries like Saudi Arabia are starting to flirt with this parallel system. There's even talk of a commodity-backed BRICS currency. It hasn't launched yet, but the building blocks are there. Meanwhile, the US is going on defense. President Trump just warned that any country helping BRICS undermine the dollar could face new tariffs.
Donald Trump is angry. He posted on Truth Social on Sunday, July the 6th, that any country aligning themselves with the anti-American policies of BRICS will be charged an additional 10% tariff. There will be no exceptions to this policy.
That's the first time in modern history we've seen US trade policy explicitly used to protect dollar supremacy. But it gets deeper, because the shift isn't just about countries making noise, it's about central banks making moves. Let's look at behavior, not headlines. Central banks in Asia and the Middle East are buying gold at historic levels. They're building swift alternatives. And they're striking bilateral trade deals in local currencies. It's not a revolution, it's a methodical abandonment. And here's how to think about it. You know, imagine the US dollar is the only basketball in the neighborhood. And for decades, every kid had to come to our court to play. We had the ball. We made the rules. But now, other kids are buying their own basketballs. They're building their own hoops. And they're saying, we don't need to play at your house anymore. But here's the thing. Our ball is still the best. The court is still the most organized. The scoreboard still works. But if we don't take care of it, if we keep changing the rules mid-game, if we start overcharging to play, then yeah, kids are going to start playing elsewhere. This isn't a crash, it's a migration. And if you wait until the neighborhood is empty, you've lost. And this isn't the first time a dominant currency lost its crown. In the 19th century, the British pound ruled global trade. Then, 2 wars, a mountain of debt, and a rising US economy quietly took that title away. No explosion, no headlines, just slow erosion. Until one day, the pound wasn't the center of the world anymore. It wasn't an event, it was a process. And the dollar is in the same process right now. Just like the neighborhood kids with new basketballs, other countries are starting to play their own game on their own courts. We still have the best ball, but if we don't protect it, the game moves on. Back in 1973, after the US severed the last link between the dollar and gold, the dollar tanked. Inflation exploded. Oil prices quadrupled. To survive, the US struck the petrodollar deal with Saudi Arabia. Price oil in dollars and we'll protect your regime. That deal created global demand for the dollar overnight. But guess what? That deal is unraveling. Today, Saudi Arabia is selling oil to China for yuan. Brazil is using the yuan to buy goods from Argentina. And dozens of countries are applying to join BRICS. The petrodollar engine is sputtering. And unlike 1973, there's no Volcker ready to jack interest rates to 15% to save it. So what does this all mean for you? If you're holding dollars or dollar-based assets, this affects everything. Imports become more expensive. Travel gets pricier. Inflation eats your savings. And retirement accounts tied to dollar-denominated investments exposed. This isn't the kind of hit that flattens you in a second. It doesn't kill you like being struck by a truck. No, it kills you like carbon monoxide leaking from the truck's exhaust. Quiet, invisible, and deadly. By the time you notice the symptoms, it's already done the damage. One day your grocery bills are up 12%. Then your 401k takes a weird dip. Then your international ETF underperforms. And you think, is this just market noise or is something bigger happening? It's not noise. It's a slow motion shift in the global power structure. And while most people are focused on the headlines, the smart ones are watching the money flows. Because money leaves first. News comes second. And if you're waiting for the truck to hit, you'll miss the fact that the engine's already been running and the fumes are already filling the room. We're not necessarily witnessing the end of the US dollar. We are witnessing, however, the end of the illusion that it's untouchable. The collapse isn't coming, it's happening. The chart here is proof. The dollar's grip is loosening. The real question now is, what is there to do about it? I mean, if that's your question too, I made this video right here just for you, showing you exactly what to hold, what to avoid, and how to build a life that doesn't depend on a currency the world is slowly walking away from. It's all here. Thanks for watching, and maybe I'll see you over here. Take care.